All right, so let's get right into it. You see all the headlines, right? They're all about trade tensions, tariffs. But behind the scenes, China is playing a much longer game. It's quieter, yeah, but it could be way more transformative. And it all comes down to two things: their currency and a ton of gold.
And that's really the big question here, isn't it? Why is China buying up so much gold and trying to keep it on the down low? This isn't just them dabbling in the market. No, this is a very deliberate, very calculated move that's been in the works for years. And that's what we're going to unpack right now, the real strategy behind it all. So if you look at the official numbers, the People's Bank of China says they've got about 2,292 tons of gold. I mean, that's already a staggering amount, right? It makes up something like 6.5% of their total reserves. But here's the thing, and this is what's so fascinating, that official number, it might just be the tip of the iceberg.
Yeah, because a lot of analysts out there, they're convinced China's actual stash is way bigger. We're talking well over 5,000 tons. Some sources even suggest they could be buying 5 times more gold than they're officially telling us. And that secrecy, that deliberate vagueness, well, that's a huge part of the strategy itself. So, you gotta understand, this isn't just about collecting a bunch of shiny bricks. Not at all. This is a calculated plan to get out from under the US dollar, to escape the financial grip that dollar dominance gives America.
I mean, think about it. For decades now, the entire world has basically run on the US dollar. It's what you use for global trade, it's what central banks hold on to, it's the foundation of, well, everything. But if you're China and you're holding trillions of dollars in assets, that actually makes you really vulnerable. Because the US can, in theory, freeze those assets, slap on sanctions. They have a lot of leverage.
And this really shows you the two sides of that coin, right? For the US, dollar dominance is power. It gives them huge influence and, yeah, the ability to weaponize their currency. But for China, it's a massive risk. It means they're constantly exposed, always dependent on a system that's controlled by a strategic rival. So you can see why Beijing has been looking for an off-ramp. And you can actually see them taking that off-ramp in the data. Just look at this. China used to be the biggest foreign holder of US debt. They peaked at over $1.3 trillion. But look at the trend now. That number has been steadily dropping, all the way down to around $759 billion. It's clear as day. They are actively moving away from the dollar. And what's happening at the exact same time? Well, here's the other side of the story. As those US debt holdings are falling, their gold reserves are doing the exact opposite. They're climbing and climbing. This is no coincidence, folks. This is a direct pivot. They're swapping out paper assets for a hard physical asset you can actually hold. Okay, but this is where it gets really interesting. Because this isn't just about gold as a safe haven asset. Nope. The gold is only one half of a much bigger plan. A plan to push their own currency, the yuan, onto the world stage. It's basically a two-pillar strategy. It's pretty smart, actually. Pillar 1. You buy up tons and tons of gold. That gold acts as a hedge. It's a stabilizer, and it's a powerful symbol that you're monetarily independent. Then, Pillar 2. You use the credibility that gold gives you to push your own currency, the yuan, as a real alternative for global trade.
And what's really wild is that this isn't some new idea they just cooked up. This isn't some crazy conspiracy theory. It's a long-term strategy, a vision that US officials have actually known about for years.
Check this out. This quote, this is from a US embassy cable that was released by WikiLeaks. And look at the date, 2009. Way back then, they were spelling it out perfectly. They said China's gold reserves will act as a model for other countries and that it's beneficial in promoting the internationalization of the RMB. They saw this whole playbook coming more than a decade ago. Okay, so we've got the what and the why. Now let's talk about the how, because the real genius of this whole strategy is how subtle it is. China is playing the long, quiet game here, not setting off fireworks. This lays it out perfectly. I mean, you might ask, why don't they just dump all their US debt at once and be done with it? Well, because that would trigger absolute panic in the markets. It would tank the value of the assets they still hold, and it would basically be seen as an act of financial war. Buying gold, though, that's the quiet path. It's slow, it's steady, and it gradually chips away at the dollar's dominance without blowing up the whole system. It's strategic, not confrontational. See the difference? So, this naturally leads to a question I bet a lot of you are thinking. Could China still weaponize the US debt they still have? In some kind of future showdown? It's a scenario that gets talked about all the time.
But here's the catch, and this quote from Scott Bessent nails it. If China were to suddenly sell off all their treasuries, they'd have to take all those dollars and buy back their own currency, the RMB. What happens then? Their own currency would skyrocket in value. And that sounds good, but it would make all of their exports way more expensive, which would absolutely crush their own economy. It would be like shooting themselves in the foot.
So if causing a big financial shock isn't the point, then what is the end game? Well, let's look down the road a bit, because the real goal here is much bigger. It's about rewriting the very rules of the global financial game. And maybe the boldest idea out there? A gold-backed digital yuan. Just think about that for a second. A modern 21st century digital currency, but anchored to a physical, timeless asset like gold. That would be a serious game changer. Okay, but let's pump the brakes a little. A fully gold-backed currency is extremely hard to pull off in the modern world. For one, it really ties the government's hands when a crisis hits. You also need an absolutely insane amount of gold. And on top of all that, the yuan still has strict capital controls. You can't just freely trade it for other currencies. So a full-on gold standard, probably not going to happen.
So what's the more realistic path? It probably looks something like this. Step 1. China uses its huge gold pile to just support the yuan, to give it credibility, even without a formal link. Step 2. Other countries that are also tired of the dollar's dominance, think Russia, Iran, start forming new trading groups that use the yuan instead. And step 3, the final result. We end up in a multipolar financial world. The dollar is still a big deal, of course, but it's no longer the only game in town.
And that's really the key takeaway here. This isn't about starting a revolution or causing a sudden collapse. It's about a rebalancing. The goal for China is to build up its own leverage, to lower its own risk, and just slowly, piece by piece, engineer a world that's less dependent on a single currency. Which leaves us with one last big question. I mean, for nearly a century, the entire global economy has been built on the US dollar. But as we've just seen, China is quietly and methodically building something else. So the real question isn't if the system is going to change, it's what comes next, and who's going to be the one to build it.